All right. What is up, traders? What's up, tycoons? Super excited for today's video. The bond market is something that I think a lot of people are sleeping on right now. And we're seeing record, basically price action, record movements in treasury yields and in various different bond ETFs. So in today's video, which is going to be the first video of a series coming out where I take a look at different bond ETFs, okay? And we're going to take a look at different duration ETFs and really go over the potential opportunity that there is in the bond market right now due to the high interest rates that we're seeing from the Fed fund rate and also the high treasury yields that we have right now, and go over and show you guys the relationship between the treasury yields, okay, and as well as the Fed fund rate, and why I think that there could be a really good opportunity. Now, EDV is the extended duration treasury ETF. All right. And Vanguard actually has this as a 5 on the risk to reward scale. Now, why is this important? Well, Vanguard classifies funds as aggressive are subject to extremely wide fluctuations in share prices. These funds may be appropriate for investors who have a long-term investment horizon. The unusually high volatility associated with these funds may stem from a number of strategies. And so, obviously, treasury yields have been ripping much higher, all right, and it's been a very volatile environment in the bond market, and the bond market is still stuck in a bear market. So that is, basically why it's a 5 here. One of the key things that I want to point out is they speak about a long-term horizon. All right. And, as I talk about the opportunity and potential opportunities in the bond market right now, I want to highlight that it's more of a long-term time horizon, right? This isn't some short swing trade. This isn't some type of thing where you're going to swing trade this for 6 months. I think that for, some of these potential strategies to work out, it could take a minimum of 1 to 2 years of holding before you start to see, some of the returns that you may potentially be looking for. Now, when you take a look here at the product summary, all right, it tracks the performance of the Bloomberg U.S. Treasury Strips 20 to 30-year equal par bond index. All right, and you get broad exposure to the long-term treasury strips market, and it provides current income with high credit quality. All right, it's got a 0.06 expense ratio. That's very nice. You take a look at the 30-day SEC yield at the time of this recording. Okay, it was at 4.57%. And we're going to get into some more things. All right. So as I mentioned, we're going to take a look at the Fed fund rate. We're going to go over the Fed fund rate is here in black, how price action relates in the EDV ETF. We're also going to take a look at the US 30 yield, the US 30-year treasury yield, okay, and show you guys basically the relationship and how the bond market works, okay, and how bonds and bond ETFs respond to treasury yield prices. And then we'll also take a look at the year-to-date performance, all right, as well as the 1-year performance. And then we're going to do something right here where we look at the performance of several bond ETFs, all right, versus the Fed fund rate. All right, and all of these are going to be included in the future videos coming within this series. So in the future, very soon, we're going to be dropping a TLT, a TMF one. We're going to be doing an IEI one. All right, and today is the EDV one. So stay tuned for the rest of those. Be sure to smash the like button, subscribe to the channel if you guys are new. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclosure. All right. And our first one that we take a look at here is going to be EDV versus the Fed fund rate. Now, what we've done is we put EDV here in red on top, and we have our Fed fund rate here in black. And you can see as the Fed fund rate goes down, this is when the Fed is cutting rates, right? You see that this bond ETF starts to go up and the price starts to go up. So back here, heading into 2009, when they cut interest rates, and as they were cutting interest rates, EDV actually went up a whopping 49.83%. So massive, massive returns there. Now, what's really interesting about this is as yields flattened out here, you can see that the performance of EDV is varied. Okay. You can see initially it drops. Okay. After yields have hit a bottom. All right. It drops another 48%. All right. It ran up almost 50%, and then it gave back all of those gains and more within, a year. Now, afterwards, from that bottom here, all right, in about 2010, roughly, it rallied over the next decade 133%. So very nice returns there. All right. Over 10%, basically a year. All right. So very nice returns in that time period. And what's also really interesting is you can see the Fed fund rate was actually starting to go back up again. And what was EDV doing? It was actually still rising. So, just because the Fed fund rate goes down and is lower, it doesn't mean that bonds have to respond the same way and only go up in one direction. All right. And just because the Fed fund rate is going up, it doesn't necessarily mean either that bond ETFs can't go up as well. Okay. And if you take a look here, this is where the peak in yields were right here. All right. And that's when we really got the big bullish movement. Okay. We got the big bullish movement after yields peaked, and they are after the Fed fund rate peaked and started to drop. In this period here where we're rising, you can see it's chopping around and really just consolidating a lot, mostly throughout that period. And of course, we have a 2022 bear market that's still going on in the bond market that started here. All right. And, really, you just seen this massive exponential increase in the Fed fund rate. And, this thing, obviously the bond ETFs, have not been looking very good. And if you've been a holder in these, it's been a very painful time, very painful experience, dropping 55% from the highs. Okay. And so this was right around COVID, actually, was the top. Okay. So, right around COVID 2020 is going to be the top there. Now, this is the 30-year yield in black. So, we talked about the fund, that this is basically how the performance of EDV is constructed. And so you're going to want to take a look at not like something like the 10-year, okay, the 10-year treasury yield or the TNX. You're going to want to look at something with more duration. This is the extended duration ETF for Vanguard. And so you want to pay attention to the 30-year. And you can see that these have an exact inverse correlation with each other. Okay, so meaning, when this one is bottoming out, the other is topping out. And that's how bonds work. Okay, it's very simple concept. As yields go lower, okay, so as treasury yields go lower, a bond ETF is going to start to go higher. All right, and it works in the exact opposite way as well, right? So when yields start to go up, as they did here, you can see that bond ETFs start to go down. Right, that's how the price of bonds work. And that's a very simple concept that you want to pay attention to and monitor. Okay. And again, you can see here that they have an inverse relationship. So for EDV, you're going to be wanting to pay attention to, something with more duration, like a 30-year treasury yield. Now, this is the year-to-date performance. You can see the 30-year treasury yield is up almost 14%. Meanwhile, EDV is down about 11.5%. And when you take a look at the past year, so 1 year's worth of time, the US 30 treasury yield is up 24% and EDV is down about 18.69%. So, again, you can see the inverse relationship here. We can see that, treasury yields have really just, gone ballistic here, breaking out past previous highs, continuing to make new highs in a very strong uptrend at the moment. And, a bond fund ETF like EDV is in a clear downtrend with lower lows and lower highs. Now, this is going to be your TLT versus IEI versus EDV versus the Fed fund rate. So same concept, Fed fund rate here is going to be in black. Okay, and you have EDV in red, you have TLT in blue. TLT is kind of like the golden child of bond ETFs and the bond market when it comes to, retail and institutions, right? A lot of people, they typically think of TLT first, right? And that's kind of the one that they think about. So, when you look at TLT right here, TLT, all right, and this is basically in all time. All right, so from the inception of the EDV ETF is where we're starting here. And we're measuring to its current here performance. And we can see that EDV actually performed the worst out of all of these, right? Out of TLT and IEI. So out of the 20-year treasury ETF and also the IEI, which is going to be your shorter term duration ETF. I believe that's like a 3 to 7 year ETF. Those are the ones that outperformed basically EDV. So, if you're looking at EDV, you have to keep in mind, what your strategy is, why you're looking into that one. You can see, of course, when it rallies, right? It rallies a lot more than something like the IEI. And whenever the trend is your friend, right? And so when the trend is behind you and the trend is up, all right, EDV is going to outperform something like IEI, but at the end of the day, TLT is the one that is outperforming EDV here as well. Okay. Now, IEI is going to hold up a little bit more in these times of uncertainty when, yields are going higher. Okay. Some of the longer term duration yields are going higher. You can see here that IEI, throughout this time period is actually still positive 8% since the inception of EDV. And, meanwhile, TLT and EDV are both lower. So a little bit less volatility here in the IEI. And, more just kind of like a slow, steady uptrend. And you can see that, basically EDV is making or approaching all-time lows. Okay, if they haven't already cracked through those all-time lows, you can see it's getting very close to those levels here. All right, TLT is also very close to its all-time lows. It's not quite there yet, but it is getting there. Okay, and it is approaching what seems to be a retest of those previous lows in the $80 area for TLT. Now, this was a nice short, sweet video, okay? Basically going over EDV, taking a look at the Fed fund rate, and also taking a look at the 30-year Treasury yield, okay? If you're looking to invest and go long in something like EDV, those are going to be two of the things that you really want to pay attention to. And of course, as always, you want to consider some of the risk factors and look into, what your thesis is for why you would be potentially investing in it. If you take a look here, again, you can see the bottom, okay, actually comes in a lot of these bond ETFs before the Fed actually starts cutting rates. You can see this period here where it flatlines. That's a pause, okay? So they hike, then they pause, and they're in this pause period. And you can see that the bond market actually starts pricing in the Fed cutting rates ahead of time. And that's when you start to see bonds rally a little bit more. So the whole reason that we're making this video today is because a lot of people are saying that the Fed is done raising rates, or even if they're not done raising rates, that maybe they only have one more hike in the future. Now, if that ends up to be a true scenario and a true case, okay, it's very possible that we're going to see the bond market bottom before the Fed starts actually cutting rates. Okay, so that's one of the main considerations that you want to have right now. And if you enjoyed this video, I think you're really going to enjoy my completely free newsletter I created for you guys. It's called Investment Intelligence. There's a link in the description. I give out really good, free, valuable finance content, as well as sprinkle in some trade ideas in there every single week. This was a trade idea on Tesla, going over some of the conditions that we were looking at. And you can see that trade turned out very nicely, especially if you trade options, netting over 100% profits on those. This is ExxonMobil, okay? And so we go over the conditions and some of the things that we're looking at on ExxonMobil. We're looking for a breakout of the bearish divergence trend line. We're looking for a MACD crossover, and you can see we got those two things, and the price pushed higher from 111 up to 117. And they're not all long positions either, okay? There's even some short ideas in the newsletter. We have a clear rising wedge. We're looking for a projection of where the stock could go potentially based off that rising wedge. And you can see how it played out and came down exactly to those levels and worked out very nicely. So sign up for that newsletter. It's completely free. If you're a fan of free, valuable content, you're really going to enjoy it. And I do want to mention that I started a Ko-Fi page here recently. I've been doing one-on-one personal sessions for a while. I do those every single week, and you can actually now come and book those directly through the Ko-Fi platform. You can book the 30-minute or 1-hour session by clicking on the commissions tab here. And that's where you can directly interact with me and book a session. You can also use the Ko-Fi platform to come here and request a specific video. So if there's some type of topic, maybe there's a specific ticker you want me to analyze, different things like that, okay, and you would like me to create a YouTube video on it, the channel is getting a little bit bigger now, and so it's hard to keep track of all these viewer requests. Ko-Fi is going to be the place where you can actually do that, and I've already started making, the viewer request videos. I just got another one today that will be out very shortly. So stay tuned for those. Reach out to me on Ko-Fi, sign up for the newsletter. And if you ever enjoy the free valuable content I put out, you can use the Ko-Fi platform to come here and click on this buy a coffee button. And it's basically a way of giving a tip or donation, for some of the free valuable content that I put out to you guys. Thank you for watching. Smash the like button and subscribe for more.